This is risk on. Bullish percent index. So right off the bat, we're heading into frothy territory here. Once we get up and into the high 60s, mid 70s, that's where you begin to start thinking about, there's a little bit too much optimism out there. But that doesn't mean we're not going up to the high 70s. So we can't say there's too much bullishness out there. Therefore, we need to put blinders on and say, you know what, we may be wrong on this short position. Here's a daily view. Big spike up today. And I drew these fans the other day once we blew through resistance level number 1. Now we're above resistance level number 2. I think we're coming up here to around 70. Yield curve. Now, the yield curve had a very, very strong day today. I watched it all day long, and on the week, it closed up 6 bips. Strong week. Going to a daily chart to give you a vibe of how strong of a day it was. There you have it. Higher low, breakout, continuation move. And the markets ignored it. So while there's clearly still an inverse correlation here, yield curve versus S&P 500, clearly inverse correlation at current. There's a little bit of détente going on here. Their S&P 500 is rallying with the yield curve, okay, until it doesn't. Now, when you take a look at a monthly chart, what looked to be a month that was going to be a potential bearish reversal bar, and it still may be, is now back in play for being a potentially very strong continuation breakout month. And don't forget, we came 1 basis point this month away from uninverting. So this is bearish. Now, if we close out the month with a topping tail, wick, shadow, whatever you want to call it, that implies that you have sellers above, or resistance above, I should say. And we'll be watching for either a gap up in September into this wick. That would imply a very bullish move and continuation move higher. If we gap down into the body, well, then we got to worry about taking out the lows of the month. So we're starting to think about September's open now in late August. 10-year bond remains in a triangle formation, weekly time frame. Check out what they did today. Big move lower. So we need to pause here. And we spoke about this in great detail on Sunday night, that if Powell comes out dovish, which he did, then we need to watch the dollar and the yields. If they sold off, well, then the markets like what he has to say. So this is a 15-minute chart of the